Sean McNulty from Coinhako. Sean, how are you?
Doing great. How are you doing?
Doing great. So, Sean, you're the head trader of the crypto options desk at Coinhako. Um, let's kind of touch on how you got into trading, your foray into options trading. I know you spent some time at JP Morgan Chase on the FX options desk. I'd love to touch on that. Then we'll jump into Coinhako and what you do at Coinhako and some of your thoughts on crypto vol versus FX vol and where do you see the space going.
Cool. Sounds great.
Perfect. So, kind of jumping into the beginning of your career, when you were in university, did you know you were going to go into trading after graduating? Did you take like majors around computer science and economics or finance in the hopes of doing that, or how did you kind of find your way into options trading?
Definitely. So I guess my journey, I guess everyone's journey is unique, but I guess I would also categorize mine as unique. So I didn't go to university right away after finishing high school. Actually, my family has a paving company in Victoria, Five Star Paving, and so I started working in the family business. I did that for a number of years, and just decided that I kind of wanted to do something different. It was a great business, obviously always fun working with family and everything, but I just wanted to do something more. And one of my best friends at the time, Noah, he was doing Forex, like prop trading, one of those prop shops where they were just kind of punting around highly leveraged Forex. And I was like, oh, that looks pretty cool. And then I started to invest in equities myself, like in kind of my very early 20s. Enjoyed it, and then got into the Forex side of things, and I was like, that's really cool. And then started looking for trading jobs and realized that I needed to get a degree to become a trader. So I went to university with a specific aim just to get into trading, which in some ways is quite nice because you know exactly why you're there. I wasn't a very good high school student because I've been working for a number of years. I could start university as like what they call a mature student. So I was able to write some exams, kind of. Transfer into the university relatively easily after doing a few sort of catch-up courses, and then was really just totally targeted at trading. So I did BCom Finance at the University of British Columbia for my undergrad. All of my electives were, like you say, computer science, coding, all the mathy sort of things, and then all my internships. I did one internship at it was a wealth management global research at Vancouver, and then I was at Morgan Stanley Hong Kong for another internship on the NDF and FX sales and trading, and then post graduating, I was looking. I always wanted to kind of move to Singapore because I'd done an exchange at NUS. But when I was looking at job opportunities, I had an opportunity to join the trading desk at CIBC in Toronto, close to where you're from, Greg. That's Montreal, so you're a rival city. We were. As you know, like when you join a bank, you can either enter a rotational program or you can get onto a specific desk. And so CIBC offered me specifically FX trading, whereas some of the other sort of opportunities I had were into those rotational programs. You can end up on doing a lot of different things, and I knew I specifically wanted to be into trading. So joined CIBC in Toronto, traded FX, spot there for 2 years. I went back to school to do my master's at the National University of Singapore, that was more of it was more for a relocation because the MBA doesn't particularly set up well for trading in the sense that it's more of like a holistic thing. But the nice thing with the MBA is you can take a lot of electives around it. So I continue to take a lot of sort of data science electives and things because I wasn't looking for an industry switch as much as I was looking for the move to Singapore. And plus, MBAs are just tons of fun. So, I got to travel a lot. I did 2 full semester exchanges, one at London Business School, one at NYU. So I got to kind of travel the world, do the masters. And then from that point, yes, joined the JP Morgan FX options desk. And then from there, was there for about 6 years. At a certain point in the bank, you either have to decide, if you're going to, continue to pursue and make that, I guess, climb up the ranks or it kind of goes through that route. Or, a lot of people transition to the buy side. And then recently, crypto's been like a very viable option for a lot of us who are interested in the space. And so I ended up interviewing with Coinhako and, really enjoyed the head of trading. Here's Kelvin C. And I think the most important thing when you join any firm is the team you're on within the firm and, how what your impression of is them, and you think you'll work well together. And it was frankly just one of the best interviews I had. Really enjoyed speaking with him. He's a really bright guy, very motivated. I could see from the interview, it wasn't just sort of those, cut and paste questions. He was very sort of into markets. I'm into markets, and so from there, it just made it a really easy decision to take the lead.
Cool. That's great. So kind of jumping back here to your start at JP Morgan after your MBA, did you trade there like kind of on a prop basis or a market making basis? Like what was sort of the scope of the role?
So it's kind of a combination of it where you're market making and then you're also, I guess what we call it, like managing your inventory. Because you obviously have these, especially at a bank like JP Morgan, massive flows. I started out on the, it's like the exotics book slash like, it was like Aussie Kiwi CAD was like the currency pairs in it. And so I guess when you join an office desk, like at a big bank, usually you spend like a year just doing nothing but working on spreadsheets and modeling. And then one of the traders on a book will kind of generally give you a chance to get more involved in a book. And in my case, is this trader named Joy Lawrence, who was the head of what we call the SRT book for whatever reason. But it was like all these exotic, it was all the sort of dual digis, triple digis, four stub baskets, like all these sort of exotic products mixed in with some of the Aussie Kiwi CAD sort of vanilla products. For whatever reason, they structured it that way. So it was on that book for 2 years, and then we're kind of like you're managing the flow and the risk, and pricing up these exotic instruments using our internal models and things. But at the same time, you've got to kind of take some directional risk and have a view on vols because the market just trades too tight now, where you can't just back to back everything when clients are trading with you, like these hedge funds and different sort of the private bank structures and things. You have to warehouse some risk, and so by that nature, you've got to kind of have a view on the market. So it was, I guess, I should say, like JP Morgan is a franchise sort of market making shop, but around that, we definitely had to take sort of views on the market in order to make budget and make money over the year.
Yeah, so that makes a lot of sense. So kind of like as a newer person on a desk, you're kind of in charge of the mathy side of these exotic options and how they're being priced, where the more senior people get to tilt the book with their own sort of bias, and then as you gain seniority, you start to gain responsibility of tilting the book. Now, when you're making sort of or having opinions on how to tilt your book, is that just based on flow? Are you looking at historical like vol data and making sort of bets on vol itself? Like, how does that perspective come into play? And is that different on an exotic desk as opposed to, say, like, market making or principal trading on vanilla options?
Yeah, so it's funny. I guess that's the beauty of trading. Really, is it's the art and the science kind of meet together, right? So when it comes to any sort of positioning, it really is. It's so much based on your personal temperament and personality and what risk you're comfortable with, and I kind of view it as there's a lot of ways to make money in the market. Like, if you're looking at it from a perspective of strategies with a positive expectancy, and then there's a lot of ways to for sure lose money in the market. So it's just, I think of it as like I don't know if Sam Harris has this book, Moral Landscape, and it talks about the peaks and valleys. And so if you imagine like a 3D topographic map with a bunch of mountains, there's a lot of different mountain peaks, and those are all sort of winning trading strategies. And then there's a lot of valleys too. So I think it's because there's not, you kind of get into these sort of, because there is a lot of sort of nuance in it, you'll have people try to simplify it or say that certain things will work and won't work. And I think there's multiple approaches that work, but there's also multiple approaches that don't work. So it's just about finding the peak that suits you and avoiding the valley that tempts us all, whatever peak we choose to stand on. So for me, I suppose I kind of take it, I'm very much into just essentially risk reward sort of thing. So you're kind of, my view is not so much if a trade works the one time, but if I do that trade 1,000 times, what's my sort of expected outcome? And obviously there's, it's an imperfect measure in the sense that you don't get to run it over and context changes, but I like to always make sure that whatever sort of position I'm putting on, I'm confident that if I did it over and over and over again, it would definitely make money. And then, the one time it doesn't make money is fine, and your risk is contained, you understand your downside, and then, obviously when it makes money, you obviously want to ensure that you have the risk reward that pays for all the times you're wrong. And, it's interesting, you think about the best sort of quantitative fund in the world, like Renaissance, right? If you look, they publish their sort of a lot of their data about their win rates and things like that. The very best quant fund in the world historically, which is Renaissance, has a win ratio of 49%. So if they can only win 49% of the time, it's like, and they've got like the most smartest PhDs running all sorts of models, huge computing power and everything. I kind of always keep that in mind in terms of that's like the high water mark. And so I know I'm going to be worse than that. So it's really, to me, just always about having that sort of risk reward calibrated correctly around different sort of market events and, levels of vol and things like that to ensure that the 40% of the time, whenever I'm right, it definitely pays for the times I'm wrong and then some.
Yeah, that makes a lot of sense. And so with sort of that kind of mindset, I'm guessing you spent a lot of time like tracking your own performance and categorizing a type of trade in this bucket versus that bucket, and then seeing how that does. When you're analyzing sort of your performance and trying to distinguish between just variance that's going against you versus something that's secularly stopped working, is there like a rule set that you think about to like, okay, this strategy, I just need to cut it, or I size it down if it loses 3 times in a row, or kind of, how do you deal with that sort of question?
Yeah, I guess it's tricky. So it's much cleaner to do like managing risk at Coinhako because it's a much smaller operation. I think when it comes to market making, the challenge is you've always got the franchise of the book, which is the flows coming in and the bid ask and everything, versus like your tilts and leans you put on the book. So the challenge is when you're at a shop where you're trading, you're very much a flow trader, is it can sometimes be difficult to decipher between like how your strategy is doing versus like the money just comes into your book from people crossing a bid ask. And so that was actually a pretty interesting realization when I made the move from like a large sort of franchise shop to a smaller sort of startup, or not really startup, it's like an established sort of cryptocurrency, but local sort of cryptocurrency company, was that you start to see that some strategies I thought worked really well, were actually didn't work as well as I would have hoped. And the reason why I had that perception was because the client flows and things kind of muddled how well the strategies work. So yeah, in terms of, my main rule is I kind of think of it in terms of almost, I guess the analogy that people use a lot is surfing, but like where if it kind of comes in waves, right? And there's just, for whatever reason, seems to be times where you just don't have a good sense of what the market's doing. Mm-hmm. And then, like you say, I think it's not so, the quantitative side is in terms of the P&L and things, but just in terms of when you have a sense that you just don't really understand the price action or what's going on, or the flows, or you don't have a lot of conviction in your views yet, the very first thing I do is cut back risk, or even just flatten as much as I possibly can. Like obviously on option books, that can be difficult, but I really think that's important until, and then, likewise, if things are working and you're getting things right, then that's when I try to size up and really size into things and put on some punchier positions, just to try to take advantage of those sort of good waves sort of thing. So it's, I guess you could get more scientific about it, but just in my experience, I guess I've been trading markets for about 10 years now, is that there just seems to be times where everything just goes against you. And it's just, the nature of markets, there's a huge component of randomness that you have to be comfortable with. When I'm in one of those spells where just absolutely nothing is working, I just try to cut everything back as flat as possible and then try to get a few small wins going, right? And then likewise, when things are really working, I try to hammer on as much as possible because I know it's not going to last. So it's like you're trying to take advantage of those good, the market gods working in your favor until that starts to die out again. So there's definitely a sort of curtailing and upsizing of risk depending on performance. And then it's and then it's just being disciplined around that, and never trying to if you're losing, never trying to chase to get your wins back, and having the discipline in that sense. And then patience and staying around is kind of the name of the game. Any number times 0 is 0. So the key thing with trading is to never blow up. And so as long as you can stay in the game, eventually you should be able to be all right. But as soon as you hit a 0, that's it, right? So it's like you just have to be able to wear it out and be comfortable with sizing down and sitting on your hands for a bit until things come your way again.
Yeah, that makes a lot of sense. And kind of one more question here, just on sort of your time at JP Morgan. When you're on like a flow desk like this, is there a certain a type of customer? Like, I'm sure there's regulars that come and do trades with you guys. And was there ever like this customer is like, oh man, this person's always right. Every time I trade against them, like that's always a winning trade. Or was everyone kind of the same and there was no like outliers as far as sort of customer flow that would seem to get it right all the time?
Yeah, it's actually good. It's interesting you say that because there were some people who were just really, I don't know what they were doing, but like I remember in particular, like obviously I can't reveal client names or anything, but there was one guy who he always did these dual digis. And the nature of a dual digi is like kind of a correlation trade, and you need sort of both strikes to be in the money for it to pay out. Like the kind of two European digitals. I guess I know people who listen to this are pretty sophisticated, so I'm sure they have an idea of what I'm talking about. But a lot of the times those trades is it really depends on how you model the correlation between the pairs and things like that. And then the challenge is when you're on like a desk where you're managing that sort of risk is you run into all sorts of problems when you pin digis. And generally when you're dealing with hedge funds, if you pin a digi, just the gamma profile it gives you, then you get into a negotiation about unwinding the digis. So you take it off your book, they lock in some profit, you take the risk off, and you're kind of playing a repetitive game with them. So they have an incentive to not be jerks too much about it, and you have incentive to try to keep them coming back. So you try to be amicable about it. But like I just remember his dual digits were just constantly a pain from like pinning all the time. Like he seemed to do quite well in them because anytime he was putting them on, they were like a 1 to 10 sort of chance of paying out, and then by the time you're unwinding them, they're usually close to 50-50. So he was doing like 5 to 1 on these things all the time. So there's those sorts of. It was interesting because at the time you kind of think once or twice there's a fluke, but there's obviously something he had identified where he was doing quite good. So you get those sorts of flows. There's also the other thing you always have to watch for is the big flows, like the big traders, because whether or not they're right, if they have a massive amount of size, they can push the market a certain way for a certain amount of time. And so if you see like one of these big sort of hedge fund names really piling into something, and the thing is all these PMs at these hedge funds, they all talk to each other. So a lot of the times you'll see them sort of doing the same things, and just as a flow desk, and you just don't want to warehouse something on a negative mark to market for a really long time. So you see someone just piling into it, you kind of either stay out of the way, or maybe something where you think that there might be something there. It does kind of point you to something that they're looking at or something that they see that is worth keeping an eye on. So I think it's one of the big values of building up the volumes of any trading desk is that you get to see I always thought it was an interesting analogy. It's one of the things that one of the guys who trained me told me, where it's like you have to think about it like, so as a flow trader, you're sitting there, you don't know what's coming your way. You're kind of like a goalkeeper in soccer or something. You're watching the curve, you're watching the market, you know where liquidity is, but you're not really analyzing trade ideas as much as possible. Where these hedge funds and buy-side funds, that's all they do all day is they spend all day thinking up ideas. And then they call you up and you have like 30 seconds to price like some exotic option firm, or 1 minute or something, right? So it's like you have 1 minute to think about something they've had all day to think about, right? So it's one of those things where it's like you have to kind of, even if the trade doesn't make sense to you, you always kind of have to approach with humility, keeping in mind that like these guys spend all day thinking about this stuff. That's all they've been looking at. And so if you don't understand why they're doing it, then it's probably you who is missing something, not that they're just not smart enough to figure something out. So so you always have to be very cognizant of this, particularly the hedge fund flows, because that's what they did. A lot of them were sort of flow traders as well. Obviously corporates and things like that are doing things for different reasons, so it wasn't the same sort of insight in terms of direction or things that might be unfolding on like a macroeconomics landscape. But like in terms of the hedge fund flows, like those are very informative and tough too, because they're usually large, they're usually aggressive, they trade really tight. Sales wants you to win every single one of them. Like it could be really tough. And then the insight you get from it, just in terms of ideas that they come up with, is quite helpful as well. Even when you move out of the bank, you kind of remember stuff that they did and have it in mind for trade ideas for yourself.
That's super interesting. That's a really good insight. And so, so you have all this experience, kind of looking at FX vol, modeling it in the exotic space, and then seeing the flow. When did you start sort of paying attention to crypto and then crypto vol, and how do you see crypto vol versus FX vol? A lot of people will ask, is crypto vol more like equity vol, or is it more like FX vol. What are your thoughts on that, and how was your kind of your journey into this space?
Yeah, so it's funny. So I I'm not like a big sort of like wasn't someone who was like super pumped about crypto from day one or anything like that. I thought it was a super novel idea. I was a huge Ayn Rand fan growing up. Like I was like big into the libertarian, read all of her books, and I was like super hardcore libertarian. And then you grow up and you kind of start to realize, see where the sort of there's market failures, I guess you call them. But so anyway, so I thought the idea was a cool idea, just the idea of a decentralized sort of monetary policy, but I wasn't super like into it. Just seemed kind of a novel thing. My first interaction with Bitcoin itself was back in, would have been 2013, 2014, so relatively early. And so when I was a spot trader at CIBC in Toronto, I also had a side business of Airbnbs where I was doing that whole spread where you rent out the unit on a monthly basis and then do overnight and 2 or 3 day Airbnbs, and obviously you could capture some yield on that back in the day. I would never do that again. It's just a total nightmare from like running from the trading floor to set up the room and flip it and then run back. And I lived right across the street, like in downtown Toronto, but it was this like your tenants would have like the person who's saying, you get all sorts of crazy people and like some really cool people as well. So actually how I ran into Bitcoin is Toronto was doing some sort of Bitcoin conference, and these two guys, I should actually look up their names because they booked in my Airbnb, and they were here for this Bitcoin conference. And I was like, oh, like what's that? And they kind of explained, and these guys, they're still in it because I actually Googled them a little while ago, but their names escapes me, and they're on Twitter and things, but they were like huge enthusiasts. So the one guy tipped me in Bitcoin. He's like, because I guess to get me involved in it, he's like, set up a wallet and I'll tip you. And I was like, hey, well, if he's going to give me money, I'll set up the wallet. So I set up the Bitcoin wallet. He obviously tipped me with a few dollars and forgot about it for a few years. Bitcoin had one of like the big moves higher. I was like, I remembered I had it and checked, and I had like a few $100s in there from like $5 or $10. I was like, oh, that's pretty sweet. And then just kind of kept an eye on it. Started to get more interested than Jamie Dimon, and is like how he always loves to come out and say these great things about crypto. When I first joined JP Morgan, would have been, so I entered in 2015 and then joined in like 2017. And it was right around when I joined, and actually me and another guy were looking at maybe doing some of the crypto vending machines around Singapore, just as a business venture, side business. Jamie, and he was a trader at JP Morgan as well, and now he's at Goldman's. But he was we were looking at doing it together, and then Jamie Dimon came out with his first, if I catch a trader involved in Bitcoin, they're fired. And I was like, okay, well, I just joined. It's like, it's probably not a great thing to do, which, in retrospect was just this very foolish thing for him to say, but, it is what it is. So then I stayed away from it for a bit. And then, Derivs just kind of got going. And the same guy who I was involved in with the vending machines, or we were talking about doing as a business venture, mentioned to me, he's like, oh, there's options in crypto now. I was like, you're kidding. So then obviously I went and looked at Derivs and obviously your website as well, as we were talking about earlier. So just to kind of get a sense of where vols were and everything in it. And I thought it was very cool that, if you wanted to trade FX vol from home, it's basically impossible. You got to have like a bunch of money, you got to set up a private bank, like do all these different things, right? Where you can trade crypto vol like on a portfolio margin basis, like from home, very similar to how you'd manage an options book in the bank. And I thought that was like super cool. So just started to play around with it. And so I guess that would have been mid 2020, mid 2021. Sorry. So it was like I was relatively still new to the space. And then in terms of FX, like I always think of Bitcoin and ETH as more of like crypto currencies, like given the name currencies. But obviously in the vol space, it is quite a bit different. Like everything trades live compared to like FX vol, you generally trade delta hedged. The vol surface is obviously a lot higher. I mean, the skew was originally for topside, which was kind of strange, like obviously all the run-ups, where now it's kind of priced to the dollar side in terms of the skew, so that kind of makes a bit more sense, and it's more FX-like. The thing is, when you work in a bank, you get so siloed. I'm not super familiar with commodity options or equity options. So, but I've heard that it's a lot more like equity options, given that it's like future trades on the exchange, a lot of it. And, there are CME options for FX as well, but you just don't, most of the stuff you trade is just OTC facing your counterparty. So there's a lot of similarities, but it seems like it kind of touches on all of them, I guess. And I understand that a lot of the people who are in like crypto vol now come from like an equities and commodities volatility background. So all of us like the FX volatility traders want crypto vol market to kind of to turn into the FX vol, like an FX vol stock market. So we want to trade everything eventually delta hedged and have everything kind of go that way. And then all the people from the other markets, like the equity markets, is like, no, we want it to go this way. So it's kind of interesting because it's still kind of obviously a new market. It's still developing. It'll be interesting to see what norms sort of develop over time because it's kind of still in limbo right now. And like depending on who you talk to. So like obviously I'm much more comfortable trading like in an FX vol sort of approach, whereas so I'm hoping it kind of goes that way. But there are a lot of people who are more comfortable kind of with the equities approach, prefer to trade the options live and all those other sorts of things. So it'll be interesting to see where it goes from there.
Yeah, very cool. And so kind of jumping now to Coinhako. So you guys are providing OTC markets for I guess directly for flow, and then you guys are also doing some market making on Paradigm, and I imagine, do you guys make markets directly on Derivs screens as well, or do you guys not make markets there? And also, do you guys do exotic options at Coinhako? Is that something you guys offer as well on the OTC desk?
Yeah, so we have a division within Coinhako that was launched recently. Like I guess would have launched I think in 2021 would have been called Privé, and it's kind of targeted towards high net worth institutions. And in that we essentially put together yield generating products for clients based on the vol surface. So your covered call, your cash secured puts. We just rolled out in the process of rolling out some other new products. Like iron condor sort of style products, protective collars. I think the principal protected notes we're still kind of developing, but I think things like along those lines is something that we're also looking or making a push into. And so our desk is we've come up with the structured product ideas, APRs that make sense, risk rewards that make sense, and then roll those out to kind of the accredited investors, high net worth institutional clients that are part of the Coinhako sort of Privé side of the business. And then, along with that, we'll obviously have to manage the risk along with that flows. And then part of the way we do that is we do market making on Paradigm at the moment. Both we stream prices them as well as like manual RFQs and things like that. And then Derivs, not so much Derivs. Like we've looked at maybe like tying into their APIs and things, but it's a little more complex in the sense that it's you're much more sort of facing sort of retail traders, I think, with them. And I think you've got to get into like the co-locating with their servers in London, I think it is, and it becomes, I think, a bit more of a technical endeavor. And then it's kind of, for us, the Paradigm market making really makes sense from a risk hedging, risk management perspective, because it's large block size tickets. You're facing other sort of like institutions, really. Then it's a good way to sort of hedge risk. That can kind of be a win-win, and doesn't mean you have to cross the entire spread to hedge your sort of client business flow. And so we're kind of focused on that at the moment. And then eventually, so it's interesting because when you look at the yields you can generate off of the vol surface, given the vols are quite elevated, we actually, this funny, when we're constructing the products, we want to make sure that the yields are not too high, in the sense that you start putting these massive APRs out there, and it doesn't, it doesn't look, it has a bad perception of it. Plus, it's like you're obviously taking some risks there, like anytime the yield goes much higher. But the vol surface is so elevated, like a lot of the times when we're constructing these things, it's about bringing the yield down and the risk down, because like generally we want people to make consistent returns. We don't need to kind of reach for it. You can make very good returns in crypto vol, like without you don't have to sell at the money strikes or anything. You can end up with I guess the most popular strategy that's out there is like the 10 delta covered call strategies, things like that. They offer these very attractive APRs, relatively limited risk, and just a very sort of comfortable introduction into that space for everyone. And it's a very sort of legitimate form of generating yield. Like they generate yield off volatility, like all asset classes do it. So it makes sense that it would eventually happen in crypto. But eventually, I think if you look at the long-term trend, even in the midst of this year, like the crypto winter and these massive swings, which was quite an interesting year to join a crypto, like start a crypto ball desk. And it's like everything's like every week there's a new crisis, it seems. But at this point, you can really generate good yields off with just vanilla structures, but eventually I think Vol's like long-term trajectory is lower. I wouldn't be surprised if it kind of settles around sort of a gold volatility or something like that, which is kind of your 20 vol handle, something like that, and in due amount of time. And then once we get there, I think we'll have to start seeing some more sort of exotic products and things like that, which will obviously, of course, like myself and my team member Douglas Cummings, and he trades out of Paris. The two of us watch the book we have the global coverage between Paris and Singapore, and we both have a background doing that sort of thing. So we'll definitely look to get there, but it doesn't really. There's no point making something more complex if you can kind of generate the yield on like in the vanilla space, given where the surface is now. And then at a certain point, I mean, it's the reason why with FX balls, I mean, they're higher now, but since they are historically quite low, and were very low for a very long period of time when everyone was QEing like all around the world, you needed to put like barriers on everything just to get yields up to levels that attracted clients. And so we're very far away from that in the crypto space at the moment.
Yeah, that makes a lot of sense. And I like the perspective of like a structural drift lower in crypto vol, which to me is totally logical. Like as the market caps grow, as the financial infrastructure and the players come in and there's more and more liquidity, there should be less vol because it takes more money to move things around and no one gets trapped and has to puke crazy prices. But until then, we're going to have, still really elevated vol. Like you said, there's a lot of opportunities. Something that you pointed out earlier, too, is that back in the day, we had topside skew. Basically, calls are a lot more expensive than puts. And there's interesting strategies. Even just a basic caller would get you a really nice risk reward built in that you don't really have to do much. You just put it on and just hope that crypto rallies and you'll win 3 times as much as you'll lose if you're wrong, which is pretty interesting. So
yeah.
So as we see kind of Bitcoin vol going down, obviously altcoins are going to have kind of elevated vol, and altcoins is anyone's game. Is that something that you have customers asking you for, like a altcoin, maybe just altcoin OTC option exposure, or are you getting some interest in Solana options? Is that something you guys are making markets around as well as Ethereum?
Yeah, well, right now we're just I guess the most active vol markets like ETH and Bitcoin, basically, like the two that we're most involved in. We're starting to look at Solana a bit, but you kind of baby step into it. The altcoins, in terms of like the open interest in the option space, I think even OTC, like looking at some other companies' sort of presentations, it doesn't seem like there's too much really going on with it. Like I think eventually we would definitely be open to making markets in it and getting involved in it, but it's tough when there's not a very established, bid ask or surface or anything like that. And then, you can build your surface on like AVAX, like, build whatever surface you want, but like, it's just the liquidity is not really there. And like, I think the people that are trading those services right now are just, their bid ask must be just massive, right? So they must be like, all right, I'll do this trade. It's like, how bad could it work out? You do have sort of the ETH and Bitcoin and Solana sort of surfaces as a reference. And then, you can also like do, I remember for a period, I think it was late 2021, where a lot of people were using sort of the ETH surface to hedge some of their altcoin exposure, right? So, you could, like, given the high correlation between ETH and maybe you'd have a higher beta to some of these altcoins, you could like, buy puts in ETH and then like be long altcoins or something. You do those. So I heard some people doing trades like that. But for us at this point, we're mostly focused on like Bitcoin and ETH. And eventually I think we'll have to expand out. And I think that there's like, besides even getting into the altcoins, there's a lot of like for instance, there could be like a Bitcoin ETH surface no one's really done, or I guess it'd be ETH Bitcoin, which I think that would be a pretty cool, pretty cool to start seeing some of the cores, things like that. Even just getting into like, so it's all Bitcoin dollar, but if you got like Bitcoin yen, Bitcoin euro, like there's so many sort of crosses that like we could still do in those space. So I'm kind of torn because like there's the altcoins, which would be cool, but I think like an ETH BTC cross would be really interesting, especially with the vol spread right now and like around the merge and things. You have this massive vol spread, some really interesting trades there. The skews and things like that get pretty like ETH skews were for topside when the initial sort of rally like took off into the merge, and now they've kind of repriced for downside, and whereas like Bitcoin riskies have stayed for downside. So you end up with these sort of really interesting sort of dynamics. So I think like an ETH Bitcoin service, it'd be cool to see that come first. And then even like, you get into the cross pairs. I mean, it's so much that can happen in crypto ball. Like there's so much building to do, so much to happen in it. That it's quite exciting that way. But yeah, I think the altcoins would be good, but I'd almost prefer to see ETH and BTC like kind of build up to their full potential a bit more before you start getting these other services that maybe don't have a lot of liquidity or anything. And even Solana, like it's started to see volumes pick up a bit, but it took a little while, and so I think it just seems like it might take a little bit longer than people expect for those altcoins to really start picking up. But we will definitely be we'll definitely be involved. We like to be involved no matter what. So that's our goal anyway.
Yeah, that's a great point about Solana. Like when Deribit launched Solana options, I think I overestimated the adoption because I thought the appetite for Solana options would be huge, but it's taking a while to pick up, and obviously Solana's having all these problems, which is definitely not helping the situation.
I think some of those, I think there's like some of the outages and things like that. Kind of like the sentiment definitely shifted a little bit more negative. It seems just people you talk to, and then conversely, the ETH sentiment is pretty positive. I mean, it's set back a bit now, but I remember I was listening, kind of listening to all these sort of hypothetical situations around the merge and things. And I was listening to this debate, and it was one guy who was really positive, like super bullish it, and one guy was moderately bullish, and they were debating like how good. And I was like, okay, well, this is probably a sign that it's maybe peak enthusiasm. It was like I guess they couldn't find anybody who didn't think it was going to be this huge win, this huge benefit. So for the whole ecosystem. So I think you kind of have having some troubles, and then the enthusiasm around the ETH merge between like the options open interest, the amount of call flies that are printed in the market and stuff. I'm super interested to see how this happens. I don't have like a ton of insight other than it's going to be very interesting over the next few weeks here.
Yeah, definitely. Yeah, the call flies we saw in ETH, just for listeners who are not aware, we saw huge lots of 2,500, 3,000, 3,500 call flies in Ethereum for the end of the year, like huge size, like 20,000 contracts, something like that. It was big.
Oh yeah, I think it's even more now. Like it was, I just remember we're obviously pricing these things, and then it's like that's actually, so that kind of relates to what we were talking about earlier with like hedge fund flows. It's like it's not exactly like a hedge fund. I mean, I think there's a few people doing it. I think people piled onto it and things because obviously everyone saw it print, but it's like, so if you did that first call fly clip, like you'd be so out of the money right now because the thing's just been paid up like continually. So it's kind of like avoiding that sort of flows as a flow trader. Like you could probably be okay now, but it's like just there's that much interest in behind it, it's like, it's just going to be tough to get out of that position if you're on the other side of it. I don't know about the trade. The trade to me is kind of, anytime you're doing a call fly, like I think like a call spread or something, you kind of have to pin that strike sort of thing for it to pay off. Like it's a very, sure, it's very little premium, but you really need to get that level right. So I think it was like 4,000 in ETH December 30th is like the big level. Well, I tell you what would be really interesting too is if we get up near that and the open interest stays about there and like the Vega and Gamma profile and things that people are going to have around that, it's going to be, it'll be very interesting price action. Like, we get up there and there's going to be all sorts of, it's going to be I mean, it really depends on how people manage the risk, but it's going to be, it'll be interesting to see.
Yeah, absolutely. So for people who want to sort of get in touch with you guys and maybe get some quotes and get in touch with Coinhako, what's the best way for them to do that? Is there like a Twitter? Is there like a phone number people call?
Yeah. So I guess we do have a Twitter, TikTok. I guess you could call, like, I got my cell number. No, I was kidding. Yeah, we got the Twitter, TikTok, also the website. It is a Singapore focused sort of exchange at the moment. I think it's actually, I think Singapore, like, it's mostly ASEAN region that can use it. There will be obviously expanding in the future. That being said, we do in terms of the market making side thing, we do kind of aim to be top 5 globally sort of thing. So it's actually the crypto bull market is so small; it doesn't take very much to kind of get into to get quite involved in the space sort of thing. So. I think that the Twitter, Instagram, TikTok, all those things, there's all sorts of updates on there. Anyone who's Singapore-based, they're probably familiar with this. Obviously been here for a while and things. Have the app in the App Store, both Android, Apple, and everything like that. And so that's definitely the best way to kind of keep on track with the firm and reach out. And if you're qualified under the privé sort of model, like whether you're an institution or family office or high net worth individual, then we'd be happy to move that conversation forward for sure.
Perfect. And then just kind of closing up here with a little bit more on the personal side. Through your trading career, was there any books or resources that really stood out to you and you were grateful for as you were kind of getting into trading and improving your career?
Yeah, I guess I think I've heard it mentioned on your show before, the Market Wizard series. That was such an awesome series. The Jack Schwartz, I used to just devour those. Remnants of the Stock Operator, all those sort of must reads. I was a huge fan of a ton of the different sort of audiobooks on the different I guess what would be the Nassim Taleb ones are good. You can't really audiobook those ones you have to read. He's obviously gone a bit off the deep end at this point, but I really liked Black Swan, Fooled by Randomness, all those books. Oh, Dynamic Hedging too. I think that one's I've heard a few people mention that as well. But that's one of those books. It's a little dated now, but in terms of a reference for market making and options, I think it's quite good.
Yeah.
I'm a big fan of just reading in general. I'm trying to think of one that I think also. There's the technical books, but the fun books are really important to read as well. A lot of the Michael Lewis ones and things like that, the Liar's Poker and things, because I think that they kind of really do a good job highlighting the culture's changed a bit now, but just kind of getting a sense. And I think you have to have that sort of drive and interest in trading, and those books that kind of give you an idea of the culture around it, and then you can see if it's kind of suited for you, if you like that sort of high octane, high energy sort of environment.
Yeah, definitely. And kind of last question here. So what, running the options desk, where do you find time to, or what do you like to do outside of sort of running a crypto options vol book?
Yeah, so it's tough because crypto options being 24/7, you're kind of always dialed in. So the way that we structure it is I've got 4 a.m. to kind of 4 p.m. shift, and then I have a counterpart in Paris. He does kind of 2 p.m. Singapore time, to basically 4 a.m. Singapore time, which I think is 8 or 9 o'clock his time. And that's 7 days a week. So it's kind of it's not, and sometimes when this stuff pops off, Saturday, Sunday, there's a lot of volume goes through, and it's quite busy, right? So you it's funny. I thought I'd work less going from a bank to a crypto firm, but I find I'm actually working more. But that being said, it's very flexible. The fact that you can kind of go off and I can do I'd be on my phone, do a lot of different things. I don't have to be in the office all the time. So having that flexibility makes it makes it much more manageable. Even though you're probably net putting more time in, I'm not stuck at a desk, which is pretty big. And then I think to me the health and fitness is really big. So I bike to work every day, so that's 20 kilometers each way, which is a decent sort of way to keep active. Actually one thing I've gotten really into, so I guess it's got the virtual background, but I actually have a gym in my home office here, so I can work out while working, which is pretty cool. And then the other one is I've got really into Oculus VR headsets. So there's this game called Thrill of the Fight. I don't know have you ever used those headsets very much?
I love those headsets. Yeah, they're cool.
Oh, man.
I haven't played that game, but go ahead.
Oh, seriously. Yeah, you should download that game, the Thrill of the Fight. So I play that game almost every day now for 30 minutes, and the amount of sweat the amount of sweat is and it's actually super fun. So I set up the living room, move everything out of the way, and it's a proper boxing game where you're kind of ducking around and boxing. So the nice thing with that is compared to a course or something like that, I don't have to like, you don't have to, go off and, commute there, commute back or anything. And you can just get a quick sort of 30-minute workout in. And so I think, the flexibility around the work location and combined with like, mixing in a lot of exercise with work really helps in terms of keeping active. And then, and then other than that, I think any trading gig, you've got to make the sacrifice. You're just going to have to be paying attention to markets all the time, and you kind of want to be like, it's the NFP tonight, it's going to be at 8:00 tonight, but I'm definitely going to be up for it. And it's if you're not like into the business or you're looking for a job that doesn't consume you like all the time, it's like trading desk is probably not the spot for you, because even in FX, like you're just totally glued in all the time. And if you love it, it's the best job ever. And if you don't love it, it's I could imagine it being a total nightmare. So I think probably like yourself, like you're obviously very passionate about it as well, like the podcast and everything. And so it's just there's not much balance, but it's but I think it's in a sense a good thing, because it's such a fun industry and environment to be working in.
Yeah, absolutely. I mean, you have to love trading, because someone else is going to be obsessed with it, and you're trading against them. So there's no way around
it's
it.
Like I think generally in life, if you're not interested in what you're doing, you're not going to be good at it, and you won't enjoy it. Like, so you just if you find for whatever, we're all wired sort of differently. But if for sometimes I wonder, because we're just sitting here looking at numbers on a screen. Why is it so? I guess it's the game of it and everything. And it is quite an interesting puzzle to try to solve from day to day. I think options, especially, like going from spot to options, was such a world changer, because you get into all this nonlinear risk and the gamma profiles and time decay, and like it's like a very complex, interesting puzzle that's always changing. And so it's like it just keeps you super engaged, and makes it tons of fun.
100%. Well, Sean, thank you so much for joining the podcast. It's a really interesting conversation. Really appreciate it. And
thanks for having me. It was tons of fun. I'm a huge fan. So.
Oh, awesome, man. Well, everyone who tuned in, thank you so much for tuning in. And then, Sean, thanks again. Catch you next time.
Good. That's great.